for South Africa should it be downgraded to junk status by rating agencies. Standard & Poor's is set to review the country's credit rating. In the lead up to this announcement, Bruce Whitfield facilitated a robust discussion on the possibilities of a downgrade with commentators from Investec Asset Management and S&P's Konrad.
Konrad, let me start with you. The 3rd of June, where you, Standard & Poor's, deliver a pronouncement on whether or not we remain investment grade or sub-investment grade. Have you got a decision? Do you know what that announcement will be on the 3rd of June yet, or are there still discussions ongoing?
There are still discussions underway, and the committee will take place in due course before the announcement on the 3rd.
Explain that committee to me, please. How does it work? Where does it sit? Is it a dark room? Are there people with cigars? Are they drinking brandy at the time? How does it work?
It might be a dark room, honestly, but it is a global committee. The way we operate is you have a primary analyst, you have a backup analyst for any given name we follow, and then the team, the primary and the backup, the guys that have to do the actual legwork and homework, they present to a committee. There are very specific rules with regards to experience, seniority, and so on and so forth. For someone to join a committee as a voting member, there are voting members in committee. You always want to have an uneven number of voting members in committee, because otherwise you end up in that situation where we have to reconvene again. And with an important credit like South Africa, you want in your committee composition, and there's a standing chair of the committee, you want to have basically cross-regional exposure around the globe. You would want to see someone from the Latin America side on that committee. You would want to see the European side on the committee. You have the local side on the committee. So it's a wide representation of knowledge and expertise on that committee. And it is important because ultimately, when you look at ratings, it's very much about what I said earlier. We are creating relativities in a way. We are comparing. And a peer comparison is the most important thing when you do your rating. And internally we call this an A is an A is an A, regardless whether we talk about Asia, America, or Europe. So you have to get that right. And that's why you would have that sort of cross-globe representation in the committee. And the voting members in the committee, then regardless of their seniority, every man, every woman, one vote.
Are you on that committee? Are you the local part of that committee?
I'm not a voting member on the committee because I would be seen as conflicted.
Yes, okay. But yeah, so there's a process, and that meeting then I guess happens in the week, the week starting the 30th of May. Does it happen in New York, London, Paris, Beijing, Bangkok?
Sorry, say again?
Belleville? Where does the meeting happen? Where does the meeting happen?
The meeting is in outer space, if I may say so. It's video conferencing.
It's a video conference. Okay, now you got a feel as to how it works.
We commute to the clouds.
Okay, it happens in the cloud, which is useful to know. When we look at it, Louis, how concerned are you, as the representatives of the South African investor, on this? So it's not junk. Let's not use the dirty word, sub-investment grade. Chris was talking about the fact that so much of the potential of sub-investment grade is priced into so many asset classes right now. We'll see a knee-jerk reaction on the day should a downgrade happen. How worried are you?
When you look at this potential downgrade, and I always say, if my mother starts talking about it, it's probably reflected in the price. So the fact that so many people talk about it, you would probably think it is fairly reflected on the price. But as Chris also alluded to, it's never reflected in the price until it's reflected in the price. So you never know exactly until the day that it happens. What I think we do need to make a distinction is that this sovereign rating relates to our foreign denominated debt.
Yes.
And not to our domestic rated government or sovereign debt, which means, and I think there's a lot of perception out there that say, yes, all these global government bond indices that track South African bonds and hold this allocation will suddenly be forced to sell out of all our bonds across the world. It's only to do with our foreign denominated bonds represented in some of the indices where you can't hold a non-investment grade holding, and that's only about 9% of our total issued government debt. The other 91% is locally issued debt, and our biggest allocator of money is people that follow the emerging market debt indices. Those are the foreign guys that invest in that follow those indices, and there, your domestic rated debt is included, not the hard currency debt. So that 91% of government debt, and that is not going to be downgraded, and there is no minimum requirement that you have to be a sovereign debt.
And also critical here is our inclusion in the MSCI World Bond Index was seen as a massive boost for South Africa. It's about 5 years or so ago. Should one of the ratings agencies, hypothetically, we're not pointing any fingers or anything like that, but should one of them go sub-investment grade on our globally denominated debt, that doesn't lead to us automatically being excluded from the MSCI Bond Index. So it's not nice, but it's not disaster zone yet.
Exactly, and I think but as I said, if you just look at or hear what we say, it actually doesn't sound that bad, but still, you don't know exactly how investors could react to that. Mm-hmm. So very easily in the run-up, or if that decision were to happen that we are getting downgraded, a 50 or 100 basis points pickup in the yields could happen. Now that very thumb-suck back of a matchbook calculation would mean in the SA bond market, if bond yields pick up 100 basis points, you will lose about 6% on your capital. So let's say it happens over a year, you get a current yield of 9 minus 6% capital loss, so you'll end up with a return of about 3% on bonds, which we don't think it's not exciting, but it's not disastrous in terms of the potential impact on the bond market.
Konrad?
Yeah, just one thing to add in terms of like how a situation could unfold, whether it would be just a more benign situation or something more traumatic, is if there were to, and I'm speaking hypothetically, you know that, if there were to be a downgrade, do you end up then at the lower level with a stable outlook or a negative outlook? Because that was the big difference also, like when we started downgrading Brazil a couple of weeks ago, and the Brazil credit story has unraveled in an amazing quick way. And we went down and kept a negative outlook, and we went down again, and we are still keeping a negative outlook. And that's where, in the markets where disruptions or high volatility could come in. But if the downgrade were to be in a way that you say you end up with, you're being downgraded and the outlook goes back to stable, I think that would be something where I believe markets would take comfort again from.
Okay, so again, in this world of ratings, Konrad, and to use another very populist term, the word junk is very populist, and another very populist term of the last 5 years has been the 50 Shades analogy. There are 50 shades of rating, effectively. I mean, there are 50 shades of downgrade, potentially. There are multiple scenarios, not all of which are disaster territory. Is that a fair assessment of it?
Yeah, no, I think it's a fair assessment. Those that speak of disasters might have their own agendas,
yes,
and reasons for saying so. Actually, Stephen Friedman, I'm not always seeing eye to eye with him, but he had a good commentary piece in the paper last week, and he spoke about a downgrade, and he called it, or the way he was arguing was, see it as a new beginning instead of the end. And I think that's also, it's a mental thing how you approach it. Okay, if you have a downgrade, take stock, get your act together, look at what it was that actually caused the downgrade and fix the problem.
And in the example of some of the countries that you were mentioning earlier, the 2-year turnaround is a period of recalibration. And countries use it as a period of recalibration. Yeah. If they take it on board and take it seriously. Chris, you're used to me asking you questions on economics, even though you're not an economist. And so I'm going to ask you a slight economics question, because I know how much you like them. The real concern that Konrad and his colleagues at S&P have is growth. He made that very, very clear. And we've seen almost every global agency this year downgrade the forecast. And even the most optimistic of the forecasts now sitting somewhere between 0.6 of 1% and 0.8 of 1%. In that environment, does it seem even possible to maintain an investment grade rating?
Yeah, Bruce, I mean, Konrad has stressed growth as a very key factor, and I would say that the downgrades of growth are not idiosyncratic to South Africa. This is a global phenomenon. We're seeing global growth downgraded, and I think the likelihood of a turnaround in the trend of downgrade in global growth is unlikely in the immediate term, which means that regardless of what policy actions are taken, I think one would need to be quite foresighted in terms of, is that going to materially change the prospects for growth in South Africa whilst the rest of the world is still slow? And I would argue that that's probably not the case. You know, I think the writing is on the wall for the rate of growth for the domestic economy for the foreseeable future. And as a consequence of that is if that is the key driving factor behind a ratings decision, then it's going to be quite tough to avoid a downgrade.
Konrad, I was chatting to a chief executive yesterday who said to me, we've got 6 months to make this, I call it the glasnost, happening. The pre-Davos meetings that were organized between Jabu Mabuza, the chairman of Telkom, Pravin Gordhan, and then subsequent to Davos, we saw the meetings involving the president. There was another one on Monday. And there's an awful lot of really well-intentioned talk happening right now, for probably the first time in this democracy. As we hit crisis, we sort of go over to the precipice and we look over, and as Bobby Gottsall said to me, we're very good at turning away and saying, you know what, not today. And we're very good at having lots of discussions. Business, labor, and government are having some proper conversations. Somebody in this audience who shall remain unnamed spotted Brian Joffe and Adrian Gore having breakfast at Tasha's this morning. And they're part of, they're the two guys who are instrumental in becoming the advisory group on small business, for example. There's a huge amount of well-intentioned stuff going on in South Africa right now in direct response to this downgrade threat. Too little, too late, or is it the stitch in time that saves 9?
I think it's important to see that this dialogue is happening. And I guess one wants to see what are the tangible outcomes. Because I think in these countries we've had many development plans that are gathering dust in the shelf somewhere. So yeah, what are the tangible outcomes and how quickly can they be implemented? So I think it is important to see that today, unlike maybe a year or two ago, that there is a two-way dialogue between private sector and government in a meaningful way. That certainly is a positive. But maybe also on a slightly different note, and yet in this context, when you look at our last press release, we highlighted a number of what I would call low-hanging fruits that could be addressed. I mean, we highlighted the concerns around sort of big legislative projects that have been taken way too long. Whether it's labor legislation, trade negotiations, whether it's minerals and petroleum rights bill that's been out there for God many years to discuss, government, industry interventions. So there are many areas, parastatals, SOEs and boards and performance. For me, quite a number of those are very low-hanging fruits. If you would have the political will to address these issues, I would say, well, that is something one can take note of immediately.
There is some political will and a decent national treasury, a huge amount of political will and desire, and there almost seems to be pushback. We've seen the president in the last week say how much he'd like to have better, a more hands-on approach to SAA, for example, which is quite frightening. But that way we could avoid buying a new aeroplane, and that would save us R1 billion or two. But there is a tension. But there's also, I'll put it to you, that state institutions this year have shown their mettle. So you rated state institutions in your 6-point rating sheet there as neutral. I would argue that since the 9th of December last year, state institutions have proven themselves to be more than capable of fighting their corner. I mean, I put it to you that they are. They're fighting their corner.
No, look, I mean, call it a strong neutral then, but, a snapshot. The strengths of the institutions in South Africa, and we've obviously seen like the judiciary sort of delivering sort of very strong opinions now, The Reserve Bank has always been a very strong institution. The National Treasury as well. And there are quite many more. And the strength of these institutions, for us, has always been an underpinning factor in the rating. Same about the banking sector. Bank regulation, for instance. These are very strong underpinnings for the rating. Without those underpinnings, we might have not made it into investment grade in the first place.
Yeah. And that's the point. Had we not seen a turnaround on the 11th, 12th, 13th of December, whenever it happened, and Pravin Gordhan being reappointed, would we be sub-investment grade already?
That would be speculation now, but you've obviously saw what incredible pressure the market put on South Africa, and without the quick decision that happened at the time, that pressure would have continued in a very relentless way. And I guess for rating agencies like ourselves, we would have had to sit down and think hard about where that rating should be placed.
Andre, your guys, your crew aren't helping very much, I'm afraid. The Minister of Mineral Resources has thrown out a gauntlet to the mining sector and basically said this is the way the mining sector is going to work in future. We're not seeing any clarity on the MPRDA. We are not seeing that sort of level of clarity. 18% decline in mining production year on year from this time last year. But with the resources prices recovering in the way they have in the last 6 months, does this mining sector become a more meaningful growth contributor as this year progresses to give Konrad comfort that there is hope? Just say yes. Okay.
No.
Your name is not Konrad Koch, and he's not Chester Missing. You can't put words into his mouth.
I think sadly we've seen the South African mining environment continue on its trend. There's very tough labor environment. We've got still two unions, NUM and AMCU, in conflict with each other, and we actually see, and we will see coming up in May, June, the beginning of actually it's been 3 years now, or 2 years since the conclusion of the platinum wage discussion. So we're up for another round of wage discussions coming up. So I think that will be quite telling, just on the labor front. And then you mentioned the MPRDA, the mining charter revisions have been recently tabled, and we're concerned about that. There's still no clarity about empowerment, the once empowered, always empowered debate, the retrospective nature of the new provisions, which is concerning in the industry. And I think certainly we need stability on the labor side and on the capital allocation side to see the mining industry moving forward. And the reality is, even though the platinum companies and the gold companies, to a lesser degree, the share prices have responded quite dramatically. There's been a very limited move in the Rand platinum price. So yes, the platinum price has recovered, but in the meantime, we've seen the Rand strengthening again. So we'll need to see much more stronger commodity tailwinds if that would override the tough labor environment and the regulatory uncertainty.
So you're not giving Konrad any cause for comfort at all, then, for the second half of this year?
Not today, I'm afraid.
Okay, well, there. Thanks so much for that. That's very helpful. If we get a downgrade, it was his fault. Konrad, a couple of questions that have come through on the SMS line. Downgrade is inevitable, says somebody. Comment?
When you look at our negative outlook, the guidance we always give to the market is the likelihood is, how do we put it exactly always? It's a more than 1 out of 3 chance. Yeah. But it's not a foregone conclusion.
So there's nearly a 2 out of 3 chance that you won't. Does timing matter in the world of S&P?
What is important for us, and it's of highest importance, is that you get your timing right. If you have to move a rating, you want to get that right. And so we wouldn't necessarily look at, let's say, is this a good or a bad time to put some good or bad news out? No, if we believe a rating has to change, then it's more important for us to get this to the market. That's where our responsibilities are.
Have we bought ourselves some time?
That question remains open for now.
for at least the next, I don't know, 3 weeks or thereabouts, give or take some time. Before I wrap up with the panel, Kenny Rapson, there's a question for you. There you are. Kenny, up onto the stage quickly. You have to answer this question, if I can find the right one. And it's a product question, and I want to come up with some final comments from our panel before I let you go this morning. You talk about your new dollar product. What are the advantages of the offshore endowment over a normal offshore unit trust asset swap? Just a quick comment on that, and then I'm going to come back to the panel.
Okay, so I mean, obviously you can buy offshore funds, as you know, buying a local endowment, but effectively the real difference is the funds remain in South Africa in rands. The offshore product is a genuine transfer of the money offshore. We think in terms of retirement planning, by the way, it's probably best to have the money sort of out a little bit away from the client. It's easier, it's less likely he's going to withdraw that money that quickly, whereas we know in local products needs change all the time and the money gets pulled out. So it's more just a difference, I think, in terms of accessibility and having the money genuinely offshore versus having it locally but getting the offshore return on a local product.
Right, I'm going to ask each one of these three gentlemen from Investec who manage Discovery Money the same question, and I want independent and individual answers. And then the final question goes to Konrad this morning. I'm going to start with you, Henry. 3rd of June, 3 weeks from today, do we see South Africa go sub-investment grade courtesy of S&P, based on what you've heard this morning from Konrad?
I would say there is a likelihood, and I'm not going to say yes or no. I'd say...
That's a yes. Okay, fine. Chris Stewart?
I am hopeful that we get a stay of execution to year end to see whether some of the policy initiatives being discussed at the moment have the sort of traction that one can expect. That said, I would still say there's 50% chance that we get a downgrade in June.
That's a yes. Okay. And then Louis?
The same.
The same.
Now, just quickly, but I do think it is a fairly short time from December to June to make a lot of policy changes. So my personal capacity, and this is really just me personally, I would like it to no decision be taken in June. And given the chance to really have the opportunity to some of the changes or the policy measures that has been taken to see if it does work and if it does come through, and then a decision is only to be taken in December, if a decision then gets taken. That said, the likelihood for the decision to be downgraded this year is probably slightly more than 50%.
Okay,
happening.
so it's a very, very close call, but all three of you concur that we could see a ratings downgrade 3 weeks from today. Konrad, my question to you, how good are they at forecasting?
I think my co-panelists are in a not very dissimilar position to where we are in as a rating agency. There are pluses and minuses we have to look at. And like I said earlier, growth keeps on disappointing, sadly. On the mining sector, I just saw a headline out there, like mining output disappointing again. And then last week, we saw the unemployment numbers coming out. So yeah, on the real economy side, not a lot of good news coming out. Like I said earlier, on the fiscal side, one has to give the National Treasury credit for trying hard and over-deliver, and trying hard to over-deliver on the fiscal consolidation side. So yeah, we are also sitting here and trying to see how we can weigh all these arguments.
So they're pretty good forecasters.
Yeah, they know their job quite well.
Are they good forecasters? We know they know their jobs very well. I won't push him any further. Ladies and gentlemen, please will you thank our panel very, very much indeed for their expert views this morning, and for Konrad Royce for coming out and giving his opinions this morning. And thank you all very much for coming on behalf of Discovery Invest. Thank you very much for joining us today. I hope you found that illuminating and useful.